Hey, Bubba Trades! I wanted to do a video analysis update of the stock market. I want to start with my risk management. It's the most important thing. It's the only thing, really. But so I have been using an ETF called the Metaverse ETF, METV. Look up the top holdings, very similar to a lot of the big tech NASDAQ names. They've got some growth names in there, like Roblox and such, but it's done a very good job kind of doing what I want it to do, which is kind of be a leveraged play on tech and growth and the NASDAQ. I'm using it primarily to hedge the downside, right? So historically, nothing stronger than QQQ. So I'm using these long gamma positions on this ETF. And then when there's, kind of these red days in the market, like Thursday, it's, usually does exactly what I want. QQQ's down, 2%. This ETF is down like 3%, 2.5%. So I have these bloated puts, and I can buy my favorite funds against, these bloated puts. So they're not free. I'm paying for the theta, through a couple of ways. One is that this actual trade, there are long gamma positions, and there's really four types of long gamma positions. There are long straddles, long strangles, married puts, and long guts positions. So a straddle is when it's the same strike price, same expiration, a call and a put is bought. That's going to be more expensive, but have more moneyness than a strangle. A strangle is when both options are out of the money. The call is out of the money, the put's out of the money. So less premium up front, less moneyness, however, because neither of those options have intrinsic value. So an option has intrinsic value for a call when it's above the strike price, and intrinsic value for a put when it's below the strike price. So a strangle has no intrinsic value at all. That's why they're so cheap. Now, a married put is a pretty good option because only one option's being bought, and it's the put, which has the downside exposure, right? So most people buy options for that kind of insurance policy if they're doing it right. So a married put gets that put in there, and then if the underlying stock or ETF pays a dividend, the married put allows a dividend to be collected for those underlying holdings. So that's something I don't get too much into. But the long guts position is most similar to a straddle, except instead of, say, the stock is at $50, so for a straddle, a $50 call is bought and a $50 put is bought. Both options are at the money. Let's say for a long guts position, it normally looks something like this. When a stock is at, say, let's just use my example, 10.50, usually the 11 put would be bought and the 10 call would be bought. Okay, so what's the advantage of that compared to a strangle? Well, both options are in the money, right? So if I spend, let's just say for this most recent one I bought, right? So just the whole overview of the long guts positions I have just on METV. I'm gonna have to do a pretty big option roll soon, where I bought the 8 call and the 9 put for just a few weeks. I didn't buy them just a few weeks out, but the expiration date is coming up. I've been holding these for a while. So I have the 8 call and the 9 put on the Metaverse ETF for August 18th, the 9 call and the 10 put, the 10 call and the 11 put. So that's all for August 18th. So I'm gonna have to do a pretty big roll. I'm gonna roll these expirations out. But the big thing I want to, kind of draw the attention to is that 8 call. So each of these options, each of these positions has $100 of intrinsic value, right? So right now, I believe this ETF is at around 10.70, okay, 10.60, 10.70, right? So let's say it's at 10.70. That means that this 8 call has $270 of intrinsic value because 10.70 minus 8 is 270. So this 9 call down here, it has, if we're at 10.70 right now, it has $170 in intrinsic value. This 10 call has, if we're at 10.70, $70 in intrinsic value. And so that's why I buy the long guts positions, is because I have $100 of intrinsic value when I buy the position, and then when the stock starts moving in one direction, the moneyness grows, and I can lock in the moneyness by what I call climbing the ladder. I actually learned this by watching the MMs do this on the bar chart, straddle, and strangle screener. Those option screeners that I looked at, where they buy, you can watch them do it on AT&T right now. They'll buy the 20 straddle when AT&T is at 20, then the 19 straddle when it falls to 19, the 18 straddle. And so there's a few things going on there. They're compounding that delta to the downside. They're also protecting themselves if there's a massive reversal. A third thing, that type of position where they buy the 20 straddle at 20, the 19 straddle at 19, the 18 straddle at 18, which I've seen them do on AT&T, is that they've got all this put delta. So now they can buy shares against AT&T, against those puts. So anyway, I just wanted to update the positions that I have. I have the 12 put and the 11 call for November on this ETF. So that 12 puts pretty deep in the money. I have the 11 put and the 10 call. So that 11 puts nicely in the money. Those are both for November 17th, and I have the 12 put and the 11 call for February of 16th of 2024. I bought that for $257. So that's just the answer to the bear question, or maybe a lot of people's questions. What's my kind of crash plan? So the thing is, I've got more downside exposure than Finchwick's biggest bears. And that's something that's super important to remember. Okay, so if someone's been taking a bearish position here, short position, I'm not saying that every single bear started their short position down here, but I will say an awful lot of them started right here. And anyway, that's not anything I care about. The point is, if someone's been bearish the market, since we were, say, below 400, especially if it was with puts, which have that kind of exorbitant decay, that position got wiped out, right? So I got kind of laughed at for having these long gamma positions, but that would have actually protected a bear. And if a bear had taken those long gamma positions, they'd have these deep in the money calls that they could short against, the same way I'm looking for deep in the money puts to buy against. Okay, so, and what's the other thing is, well, I'm getting these huge dividends now from these covered call ETFs, and I'm also getting capital gains from the holdings that aren't covered. So I can lock in those gains by taking the premium or the capital gain and buying another long gamma position, and continuing to raise the strike prices, right? So now if SPY reverses, I'm going to have lots of deep in the money puts on the Metaverse ETF that I can buy against, right, so to speak. And I'm going to have lots of covered call premium coming in, right? And the implied volatility gets higher. I've got deep hedges in the money. The premiums are going to be huge. The shares are going to be discounted, and I buy against them. And then that's kind of the idea, right? But the idea is definitely not to pretend that if I'd been taking a short futures position or had been loading up put options, and then SPY rallied, 30-40%, from a low, or just, I think QQQ had the fastest rally in the first half of a year since the 1980s. This year, I'm not going to pretend that I still have puts on SPY, or that I still have a short futures position, but I'm going to have to, right? If I'm selling Discords. This is a 1, 2, 3, 4, 5 waves impulse for SPY. And so this is pretty important because there's a concept that I want to introduce. There's a concept that I want to introduce in this video that really isn't like a technical part of Elliott Wave. It's just something that I've noticed for, years and years, is that there are not all parts of the wave count are created equal, especially as a trader. All right, so each wave has their own different personality, which a lot of people know. But for me, I, as an investor, I kind of group the waves together, right? So there's 5 waves, and so I would say waves 1, 2, and 3 are part of what I call the guarantee phase. Okay, so that is said with quotes around it, that word guarantee, because in investing in finance, there are no guarantees. There are absolutely no guarantees at all real finance seers, they will even prepare for crazy risk that most people would never think of, like the collapse of the dollar, a nuclear bomb going off. Shout out to the Oppenheimer movie. I had a finance professor say one time, well, what are you going to happen if, New York, has a power outage or something like that, anyway, I don't know why, I got off on that tangent, but just the idea that there are no guarantees in finance. So when I say the word that the guarantee phase for the next few minutes, know that is with a huge, that's just kind of vernacular. Okay. So in Elliott wave, here's what I mean. The whole premise is 5 waves up, 3 waves back. Okay. And for the bears, it's 5 waves down, 3 waves up. Okay. But the whole idea is to look for 5, 3, 5. Okay. The 5, 3, 5 opportunity is the whole point of Elliott wave. 1, 2, 3, 4, 5 waves up, 3 waves back, and ideally the 3 waves back goes to at least the 50% retracement of the 5 waves up. So 5 waves up is wave 1 or wave A, 3 waves back to the 50% retracement. It can also go to the 61.8% retracement, and for growth, high beta, even the 78.6% retracement. But the idea is the same. 5 waves up, 3 waves back. That's 1, 2, or it's A, B. So this wave 3 or this wave C opportunity is the whole point of Elliott wave theory, okay? Because in Elliott wave, whether it's wave 3 or wave C, the minimum expectation almost all the time, and yes, there is an exception called truncation, is that the minimum target is the length of wave 1 or wave A placed at the wave 2 or wave B low. Okay, so here's why that's important. That takes SPY to 609. Not really a useful invalidation level with SPY. That's why I'm using, we'll get into other, charts in the market, see if we can start defining the downside a little more, but that's why I'm using these long game of positions on the Metaverse ETF. It's also why I really want to start talking about a bond position that I'm using with TLTW, TLT, LQDW, and LQD, and even HYGW, and another ETF that tracks high yield bonds, because I think there's a big opportunity in that market, especially with these new covered call ETFs. The premiums are pretty huge. The risk is, in my opinion, pretty low for a blend of TLT and TLTW. Anyway, that was another way of saying that I'm using covered calls, income, the Metaverse ETF long gamma positions, mostly to prepare for what the bears are going to say. As always, the bears for the foreseeable future are going to be saying this. This is wave A. That's wave B, right? This is wave C. Okay, so this is the problem with not looking at the rest of the market. This has been invalidated for, a pretty long time. Microsoft and Nvidia, I would say, are pretty clear candidates for doing that. Caterpillar, and the industrials, even a lot of the action we've seen from, Starbucks and JP Morgan, and, we've even seen market ETFs, DGRW, Wisdom Trees Dividend Growth ETF. We saw XLI, this week, MOAT, MOAT, break this high. So we've seen a lot of, kind of charts around the market invalidate this A, B, deep wave C view. And I've been, pointing that out for a while. Anyway, the length of wave 1 placed at the wave 2 low gives a minimum wave 3 target for 609. And the reason that I want to talk about that minimum target thing being so important is because that's where I believe in Elliott wave theory, the guarantee phase ends. Okay, so the reason that I call it the guarantee phase is because there's 5 waves up and there's 3 waves back to the 61.8 to 78.6% retracement for higher beta stocks, lower beta indices, value, sometimes the wave 2/wave B ends at the 50% retracement like we saw with SPY. But when we see 1, 2, 3, 4, 5 waves up and A, B, C, 3 waves back to the 61.8 to 78.6% retracement, that's where the quote unquote guarantee phase that I've coined begins. where I can find a stop loss. The 78.6% retracement was the one used for Nvidia. And then the minimum targets are that the wave one high gets broken, which it did. Then the length of wave one places the wave two low is also a minimum target for wave three, and that's also been reached. So 420 is what I would say ended the guarantee phase for Nvidia. Okay. Now that doesn't mean Elliott Wave is useless or anything like that. It means that that was kind of the big opportunity, and now there's a phase called the unfolding of waves 3, 4, and 5. Okay, and this is the end of the guarantee phase. This is the nuance phase. Okay, so once that wave 3 minimum target has been hit, which it has for Nvidia, we end the guarantee phase and we get into the nuance phase. All right, and the nuance phase is really important. Okay, because we live in a world where people don't really know what nuance is, and I get called a broken clock. I get called a broken clock who's right twice a day, right? And so if I'm a broken clock during the guarantee phase, when Nvidia goes the length of wave one, places the wave two low for a perfect hit to 420, and now all the financial media, right, Goldman Sachs analysts, they're coming out and getting really bullish Nvidia, talking about the AI. Everyone's talking about, the AI boom, right? Everyone's saying that's why this happened. No one's saying it happened because of Elliott Wave. They're definitely not saying it because I saw, just like in this range, the MMs load up countless straddles and strangles on Nvidia to prepare for this rally, buy against those in the money puts on the downside, and then get ready for the ride. So if I was a broken clock during then, when a $1 trillion market cap move that captivates the financial media attentions for 6 months, if I'm a broken clock during that, I'm definitely going to be a broken clock during the nuance phase. Okay? And I'm not sure how long I want to be around for that, just to be honest, because the way it gets for wave 3 is that there are kind of levels. All right, the minimum target's been hit. Minimum target 1 is the wave 1 high. Minimum target 2, length of wave 1, place at the wave 2 low. Now it's 420. All right, that's been hit. The further target is the 161.8% extension. That's all the way up at 541, and that's not guaranteed to be hit. That's kind of like that would kind of be like if Nvidia just went straight up to 541. That would be where it's like, okay, Nvidia on a beeline above the 540s with no stop. That would probably be a good time to look for this wave 3 to end before a shallow wave 4. But really, because we've hit this minimum wave 3 target, the real way to play it, at least from the buy the book kind of trading system that I built, is if Nvidia's up, 150%, selling half, I'm getting more than the original investment back, and I'm even letting more than the original exposure ride, right? So I'm letting the winner run, and I'm, keeping, and I'm, taking profits. All right, so that's kind of what I do. If I do get a big winner, I'm up 100%, 150%. There's always going to be an opportunity to, sell and remove the original risk, but also let more than the original position ride. So that has the opportunity, from the original NVIDIA setup. Another thing that's pretty interesting is that there's a new ETF called NVDA that's selling synthetic covered calls on NVIDIA. And so if I think that one of the likely possibilities is that NVIDIA is going to bull flag here for that kind of classic wave 4 triangle and then go higher, well then, NVIDIA is a great option because I'm collecting premium during this whole time and I don't think it's going to crash. All right, now what's kind of the scary berry option? The scary berry option is that this is in its scary berry in the, short-ish term, is that this wouldn't be a wave 4 correction that ends. It's a wave 2. It's another wave 1. Sorry. This wouldn't be a wave 3 correction that's ended. So we wouldn't be looking for a wave 4. We'd be looking for a large, sorry, one more time. This is wave 1 and wave 2. The most bearish option for the bears, since we've gone past this equal legs target, is that this wasn't a large wave 3. It was a large wave 1. Therefore, we're not looking for a shallow wave 4 correction. We're looking for a deep wave 2 correction. Okay? And so this is why I say it's the nuance phase, because this is still bullish, right? This is actually extremely bullish. If the answer is 1, 2, 1, 2, Nvidia enters wave 3 of wave 3, that's extremely bullish. That says that this is all a wave 1 rally. This wave 2 correction gets bought. Wave 3 of wave 3 gets entered. Right now, would people have that sentiment, if we saw Nvidia back in the, low 300s? I don't think so, right? So that's why I think it's important for, honestly, everyone, especially the viewer, to think about, if they really think I'm a broken clock. Is that just an insult because you were mad on Twitter, or did you really think that $1 trillion market cap move that has captivated the finance world, that was actually an AI coincidence that no one knew about, especially all those people who bought straddles and strangles? It's not going to hurt my feelings. Okay. It's not. It's something I would think about if I was watching this and I really thought that all these perfect hits were, broken clocks being right, coincidences, and, it's all about pattern recognition. In business, we can tell when things are, coincidences and when they aren't, right? Another perfect example, Tesla. Man, this was a coincidence. So the guarantee phase is that 1, 2, 3, 4, 5 waves up. Okay, we have an ABC correction where the length of wave A, place of the wave B high, is where wave C ends, and it did hit the 50% retracement. Okay, so that's kind of the setup. The stop, a very tight stop would have been the 61.8% retracement. I posted the 78.6% retracement. Tesla's got a little higher beta, but the idea is the same. 5 waves up, 3 waves back. The length of wave A, place of the wave B high, is where wave C ends. So I'm looking for the length of wave 1, place of the wave 2 low, to give a minimum wave 3 target, and that's hit on the dot, right? So that's not me putting a bullish tag on stock twits. That's not me saying, hey, this isn't going to end well, vaguely. That is a extremely uncanny accurate prediction for hundreds of billions of dollars in market value. Nvidia was trillions, right? Microsoft has been trillions multiple times, right? And so now we're in the nuance phase, and there's a lot of nuance to the count, and there are certain people watching this channel, I think they know who they are. I'd love to have a private page and go subdivide this and say, hey, for people who understand nuance, if we're above this wave 4 low and 240 holds, wave 1, wave 2, from that daily low, that wave 3 target is up at 335, potentially a little more from there, right? Now, if Tesla does go break below wave 4, is that, remember, this is the nuance part. If Tesla does go break below the wave 4 low, is that the end, right? Well, this would still be pretty cleanly from this low, 1, 2, 3, 4, 5 waves up. Now, this would be a very short wave 5, which is one reason I don't like this count. But if we look at the RSI, 1, 2, very clear, 1, 2. Wave 3 makes a higher high on the RSI. We have a shallow wave 4. Potentially, the bears are going to say wave 5 has ended with momentum divergence. So we should be looking for a big wave 1 to have ended. And if this wave 4 low goes, we can see a deeper wave 2. Now, would any bear say this if we did get down, to a deeper wave 2? Hey, this whole thing was wave 1. This was wave 2. We're getting ready to go, right? Would I just be called a broken clock? You know? Again, it's not something that hurts my feelings. What I'm saying is this was the guarantee phase. Wave 1, ABC wave 2. So, finding a stop with the fibs and holding till that minimum target's been reached. That's the whole shebang of Elliott wave. That's it. That's the whole reason to count all these damn waves and go through that embarrassing learning phase and all that. Now we're in the nuance phase. In the nuance phase, there's a lot of money to be made, but it takes a lot of nuance, right? So if we're above, and just, for my holdings, this is what I'm playing. I'm looking for, from this low, we formed a small wave 1, a small wave 2. We'll head up to the 161.8% extension of this wave 1, wave 2, up until the mid 330s, possibly, a little higher. I'm looking to take half of my Tesla position up in the the 30s. We'll see if we get there. I'm holding Tesla, and then we'll see. It's getting a little ahead to talk about that. But the whole point of all that was that once SPY gets to 610, 609, from an LA wave perspective, we end that same guarantee phase that Tesla ended in its daily count, that Nvidia ended in its weekly count. And it doesn't mean those stocks are done. It doesn't mean there's not a lot of money to be made, buying dips and playing the upside and stuff like that. It just means there's a lot of nuance, right? And so once SPY gets up to the 600s, it's that same kind of, we're not in the guarantee area anymore. It's going to take a lot of nuance, and, I'm not really looking forward to it. So we'll see. I have a lot of stuff to think about then if that does happen. If the market crashes, then I've got a lot of in the money puts on the Metaverse ETF and premiums coming in, and I'll buy against them and, run it back again. Anyway, Microsoft 1, 2, wave 3, ABC correction wave 4. So for these tech names, really focus on that 2018 low, 1, 2, wave 3, ABC wave 4. And so we're at the 50 to 61.8% retracement. Same view as the NASDAQ from 2018, 1, 2, 3, 4. Big wave 5 being entered. For Microsoft, that minimum wave 5 target, or at least the wave 5 target I'm looking for, is the length of wave 3, placed at the wave 4 low. That could take Microsoft up to the 430s. I think the biggest thing about the Microsoft chart, very similar to Nvidia, but especially for SPY and QQQ, is that SPY and QQQ haven't broken this late November 2021 high. Microsoft and Nvidia being above it from an Elliott wave perspective, that's a sturdy amount of evidence. It's not classical traders, that doesn't mean much, but from an Elliott wave perspective, I think it's pretty fair to say I will not lose this video. So QQQ, you must load, because I'm going to keep going. All right, it's loading. We'll see. I don't know why it looks like this. Bar chart, do not freeze on me now. Anyway, here's Applied Materials. I just wanted to talk with QQQ, just the idea that we've seen Nvidia, and we've seen Nvidia, and we've seen Microsoft break to a new all-time high. And I think that from an Elliott wave perspective is a leading indicator for a certain amount of stocks, especially in the tech sector and the semiconductors. I think looking for Applied Materials to go break that same all-time high from an Elliott wave perspective is very reasonable. So I've kind of outlined it here. Got a little cute with the subdivision, but just to I'm going to talk about AMD next. Just bringing up the idea that Nvidia is not the only semiconductor stock. SOXX, I believe, is yet to break this high. Applied Materials is yet to break it. Advanced Micro Devices is yet to break it. Qualcomm, Micron. The whole idea is that there's more semiconductor stocks than just Nvidia. There's more tech stocks than just Microsoft. And from an Elliott wave perspective, that gives us a pretty good amount of evidence that I shouldn't be looking for, if I was basically the idea is if I was looking for a Nvidia not to ever break a new all-time high, and that it was gonna that counter trend rally from the late 2022 low was just a wave B, counter trend correction, and I was looking for a deep wave C lower, below the 2022 low, and then Nvidia was gonna crash. From an Elliott wave perspective, when Nvidia explodes to a new all-time high, especially if I'm seeing an impulse form with advanced micro devices and applied materials, shorting those names before they follow Nvidia to a new all-time high, especially when their charts were very analogous, is not the right move, at least from an Elliott wave perspective. Okay, wanna short Micron and AMD and applied materials and QQQ before they hit a new all-time high because I'm a furu. It's not going to bother me. It wouldn't be the first time people said they were counter trading me. It just they seem to always forget the big tech stocks. A lot of people were counter trading me in late 2022. I'm not sure what happened to y'all. I never said I was bearish Nvidia, so I guess you never covered your short. I never said I was bearish the NASDAQ, so I guess you're still short the NASDAQ. I never said I was bearish SOXX, so I guess you're still short SOXX. One sec, let me plug in my laptop. Anyway, a lot of people want to counter trade me. I don't really take it personally. They go away. When the market goes up, they're really good stock pickers, and I would say looking for a big short wave C before Micron hits a new all-time high, before AMD hits a new all-time high, before applied materials and QQQ hits a new all-time high. I don't think that's going to work out. We'll see. If it doesn't, you're just going to make a new FinTwit profile, or, point out, the stocks that haven't gone up, that the stocks that I talk about that haven't gone up yet. So, those are probably the next ones for me to buy. Anyway, Advanced Micro, very similar to AMD. I think 1, 2, 3, 4, 5 waves up. ABC correction at the 61.8 to 78.6% retracement. So that's kind of that same weekly setup. I wanted to get a little cuter, a little more short term on this daily count. So if we look at, or it's still technically the weekly count, but if we kind of zoom in, I think a possible roadmap could look something like this: 1, 2, 3, 4, 5, wave 1 and wave 2. And then if we look, that's a pretty clear 5 waves impulse and a wave 2 correction. And so then we don't have a wave. We make a new high in price, but we also make a new high on the RSI. In other words, we don't have momentum divergence. In Elliott wave theory, that suggests we don't have a wave 5 that's ended. So just like applied materials, just like QQQ, I'm just trying to point out kind of what a roadmap could look like, where we keep seeing some of these tech stocks that are set up to follow Microsoft and Nvidia, fill out the right side of the base, what that could look like. If we look at AMD, the very aggressive view is that this is a wave 1 and a wave 2 from this low. So this is a large wave 1 and a wave 2. This is another wave 1 and another wave 2. That would be pretty aggressive. The 61.8% retracement is 100, pretty flat. So above 100, not bad. RR, that would be a pretty aggressive view. I think it is kind of the right one, though. The other view is that this is wave 3 and wave 4. So in that case, the 50% retracement is a pretty good place for a wave 4 to end, and a wave 5 can be expected for AMD. and then bulls are going to look at this weekly RSI to see, does this weekly RSI break back above 77.51? If it does, then that's going to confirm the next new high for AMD, called above 100, isn't a wave 5 ending. It's a wave 3 of wave 3 in progress. And so I said I was going to get a little cute. And so it could be something like this with the subdivision. And so that's why I really just kind of said, if nuance isn't your thing, why don't you do us both a favor and unsubscribe and unfollow? I mean, I really, and that's not like, I'm not trying to be, sound like I'm dejected or anything like that. But really, like, if nuance isn't your thing, we're beginning the nuance phase, right? And Nvidia is well past the equal legs target. Tesla and Microsoft and, a lot of stocks, they've just done uncanny stuff. And, you want to lie to yourself and say it's a broken clock being right, that's fine. You can't, you want to lie to me, lie to whoever. It's not going to bother me. You know what I mean? But it's just not going to be, that was the guarantee phase, right? Nvidia and Tesla, they're going to take a little nuance now. And if I was a broken clock when, I'm perfectly predicting $1 trillion market cap rallies, $500 billion market cap rallies, and now your gurus are talking about AI, right? Goldman Sachs just came out. They upgraded their AMD, their Nvidia, price target. They were, literally bearish at the low, bullish at the high, like a joke, But you're saying I'm the broken clock, you ain't lying to me. You ain't lying to me. And let me tell you something. A lot of y'all, think I'm crazy. Let me tell you something. I actually do have a brain condition. You probably have figured that out. My prefrontal cortex is pretty messed up, right? My prefrontal cortex didn't come out of the womb right. So that's the emotional processing centers of the brain. So one of the, there's a lot of consequences to that. There's actually some really cool benefits to that. But one of the consequences of me kind of having, diminished prefrontal cortex is that I'm not really capable of, a few things that a lot of humans are capable of. One of those things is I'm not capable of being embarrassed. I cannot be embarrassed. I think that's why it's important, for that's really helped me as an investor, especially learning early on, being wrong and, stuff like that. That was, I didn't have the ability to be embarrassed. And a lot of people, they get embarrassed, they get called dumb money, and so they just join the wagon. If Bloomberg is saying something, if Goldman Sachs turns their rating to bullish Nvidia, when they were bearish at the 2022 low, then they're like, oh man, I should buy Nvidia now, because they got embarrassed, right? I can't be embarrassed, right? I can't be threatened. That's the second one. I can't be threatened, right? It's not possible to threaten me, right? When the president says, you guys all got to go get your jabs, or you're going to starve to death, you're not going to have jobs, we're going to find your employer. I can't register that threat, right? Because I knew it was coming before it happened, and I made an 1,100% return on Pfizer options, and you can go check 0% implied volatility, ranking percentile, right around this low, and I know it because I bought lots of options on it. So I can't be threatened. I said, Mr. President, I know you're full of shit, right? I paid all my bills this year, with options on, your little buddies that you got, and I can't be threatened, right? So I can't be lied to either, right? They said what, that they had long-term proof that this, could protect from the Omicron variant, the Delta variant, and that you could even, what were they saying? By the way, I think Pfizer ends wave 2 at the 78.6% retracement, begins a monster wave 3. I believe that small wave 2 low is 33.36, so above 33. A rally towards 61 can occur. Pfizer, by the way, Just to get a little bit of fundamentals in here, 4.50% dividend yield right now. Looking at these fundamentals, raising the dividend, except for, and even special dividends for many, many years, on its way to be a dividend king. I think it's already a dividend aristocrat. Payout ratio 25%. It's got all the green lights, high profit margin, high return on assets, high return on equity. Wish I could see the interest coverage, but 4.50% yield. A lot of reason to think that if the MMs have been buying straddles on and strangles on Pfizer, they've been doing it to accumulate shares, just like they were in 2020, and they're getting ready for, in my opinion, a very similar, just like they were in 2021. In my opinion, they're getting ready for a very similar thing. Now, for Moderna, right, they said that they had long-term evidence that, and people say this is where, like, people will tune out. And I'm like, isn't it, they told us, like, this kind of, like, affected our lives, right? It's just, like, a little interesting. But, like, how can you not make the connections that, I'm calling BS on what they're saying is going on in the news, right? And then that's how they're saying, like, how many people were affected, like, realistically, how many people were affected by the exact same news stories that we were told, like, were, surprise FDA announcements, oh, we have long-term evidence this is really safe for children. And I'm just like, wait a minute, guys. They bought a lot of options before this. Like, I think we should probably tell these parents, like, hey, they don't actually have long-term data on this. And you're just going to stop caring about, really, you just stop caring about this. And, you just stop caring about this in early 2022 because they tell you to talk about Ukraine. Like, is that a joke? You said that every child in America should be subject to medical apartheid. And then, in 2022, they're like, we're talking about, Ukraine now. It's like, I don't care about medical apartheid anymore. I hope you keep that opinion. If Moderna is above 115.41 and begins a wave 3 of wave 3, up towards the 240s, right? We don't care about, we don't care about medical apartheid anymore because they told us, to focus on oil and what was causing oil, right? Same BS, right? I had a video called "What's Going to Happen to Inflation in 2022." Talked about, to the dollar, to the percent, about a 35 or 40% increase in gas prices in soybeans in the first half of the year, which is exactly what happened. Using the same option screeners that I used to, predict Pfizer, predict tech, predict Nvidia. And people are just like, stick to stocks. I'm like, what are you talking about? Stick to stocks. Do you not see how this affected, like, everyone's life? Like, do you not see how, like, I perfectly predict Chevron, ExxonMobil, Occidental Petroleum, and then, XLE to the dollar, to the penny, like, even with time frames. And, now a country's being invaded and everyone's just like, oh, like, that's why my gas prices are high. It's not because of the options market and all those, MMs. And it's also a coincidence that they said oil was going to crash. Hey, everyone's short oil, right before, they have all these surprise CPI reports. And it's just like 1, 2, 3, 4, 5. You can almost just see them doing it again, right? We're going to talk about crude oil. Crude oil is going up, probably, if I had to guess, someone's going to invade, maybe, a president's going to die, right? Something's going to happen to oil. We're going to have someone new in office, whatever, right? It's going to be another psyop. It's going to be just like, just like Ukraine, just like the CPI reports, just like, we have long-term data that the Omicron variant and, the Delta variant will go away if you mix Moderna and Pfizer vaccines on your children. Yeah, we have long-term data that's safe and effective. And you idiots just nod your head. And I'm just like, if you can't see you're really saying stick to stocks and you're sticking your kids with, experimental jabs. And then you're just forgetting about it. you're just forgetting about it, right? And I'm about to watch you talk about it again. You're about to start talking about oil and Pfizer again, and I'm gonna have to hear it, right? And it's gonna be annoying, right? Because it's always annoying. And I guess we're not talking about QQQ in this video. Oh well, let's talk about some boomer stocks. XLI, industrial ETF XLI. You would think this would be a pretty nice leading indicator for the Dow Jones Industrial ETF that looks just like it. 1, 2, 3, 4, 5 waves up. RSI, not as clear, but we have this 1, 2, wave 3, makes the highest high on the RSI. Shallow wave 4 and a wave 5 with momentum divergence. ABC correction. This one doesn't go down to the 50% retracement. For a very low beta ETF, a 38.2%, a wave 2 can end. Typically, if something does only, there are short wave 2s, but usually if I get a wave 2 that only goes down to the 38.2% retracement, I'm going to go ahead and add this wave B label and just say I need to be prepared that if we do go hit this equal legs target of 142, that's not going to be the minimum wave 3 target, and we have a shallow wave 4 and wave 5 higher. That could be the wave C target, and we have a bigger correction in the bigger picture. From this low, bulls are going to look for 95.15 to hold as an invalidation for the smaller degree count. Look for something like this to play out, where we can see, XLI up in, the 110s, and let's see that at 120. Yeah, so the 118, 117, the 122 looks like a wave 3 target within the cycle. From this low, wave 1, wave 2, wave 3, up towards 117, 122, shallow wave 4, wave 5 higher. Ultimately, bulls are going to look for 142.91 to be hit. Honeywell, another industrial, slowly climbing. I saw them buying the 210 straddle on Honeywell when Honeywell was only at 207. That makes me think that they're using a bigger put delta on that 210 put because it's more in the money, and they're using a smaller call delta on that 210 call, and they're using that kind of window where you've got, maybe the put delta was negative 53, the call delta was 47, so they're slightly bearish to the downside, and maybe they're using that 6-point difference to accumulate shares. They could buy 3 shares and balance out that delta. 1, 2, 3, 4, 5 for Honeywell, wave 1, ABC wave 2 at the 61.8% retracement. I think from this low, another wave 1, another wave 2. We see Honeywell enter wave 3 of wave 3 up towards 238 for that minimum wave 3 target. Royal Caribbean, I think, is a huge leading indicator, particularly for Norwegian cruise lines, which I talked about recently. But I also think it's the leading indicator for a lot of travel stocks. Booking.com, very similar to Expedia, which we're about to go over, broke above an important wave 1 high. Royal Caribbean's broken above a wave 1 high. Delta Airlines even getting pretty damn close. United Airlines not looking too bad either, where we could see, multiple airlines, even multiple cruise lines, multiple highly related travel names above 99.24. Above this wave 1 high. Royal Caribbean's already above it. Wave 1, wave 2, wave 3 of wave 3 is in progress, and this is really just a bigger deal on this long-term count. 1, 2, 3, 4, 5 waves up, wave 1, ABC wave 2, 1, 2, wave 3 of wave 3 begins for Royal Caribbean, and I think that it's mostly just the leading indicator that we're going to see these exact same ideas in the big picture for these transports and these travel names. 1, 2, 3, 4, 5 waves up, wave 1, wave 2, another wave 1, and another wave 2 for Boeing. It's just waiting to break that wave 1 high as well and confirm it's within wave 3 of wave 3. So I would put it, pretty similar into the, the unshortable category, or something that may be baiting a lot of people to short. That I think from an Elliott Wave perspective is ill-advised. We're going to see Boeing make new highs. I think we're going to see, and as far as opportunity goes, there's one airline that's a pretty big airline that's still pretty far down here. I mean, Delta Airlines and even American Airlines, they're kind of making their way downtown, but Love isn't walking fast. It's homebound. It's 1, 2, 3, 4, 5 waves up. large wave 1 and ABC correction wave 2. I think this is another wave 1. A wave 2, the 78.6% fib, 28.40 is pick the low. Nice RR for wave 1, wave 2, wave 3 of wave 3 to begin. That equal X target is 70. I know it sounds crazy, but they all sound crazy, don't they? Anyway, and some of them are. That's why stop losses and, for me, long gamma positions and covered call ETFs and diversification and cash, all that boring stuff. That's what allows me to, have the fun parts. Anyway, 1, 2, 3, 4, 5 waves up for Expedia. Wave 1, ABC wave 2. So this is either 5 waves up wave 1 or 5 waves up wave A. And this is 3 waves up. I mean, this is just pretty. This is for the Elliott Wave textbooks right here. Look at this RSI. 1, 2, wave 3. Higher high on the RSI. Shallow wave 4 correction. Wave 5 ends with momentum divergence. That is an impulse. 1, 2, 3, 4, 5 waves up. You could count it on the RSI. 1, 2, 3, 4, 5. You could put the labels there. That's an impulse ABC correction. Perfectly 3 waves. No debate. Exactly a 3 waves correction. Now another wave 1 and another wave 2 at the 61.8 to 78.6% fib. Bulls are going to look for 82.39 to hold us the low. They're going to look for 87.94 to hold us the low. That's a little wide, but I think this is a wave 3 in progress. We're going to see Expedia break towards the 217s, and then that's the high, and then that equal X target is 258 in the long term. So that's none of those things are Boeing and Expedia and Boeing and Expedia and Royal Caribbean and what could possibly happen with Delta Airlines and American Airlines and Norwegian Cruise Lines. None of that's direct leading evidence for Disney, but they are kind of all travel-related names, and we're seeing with Royal Caribbean and Booking above wave 1 highs, and more opportunities for fall. The leader, I think that. Disney, those aren't leading indicators for it. But Disney hasn't broken this wave 1 low yet. And I think it's really interesting. I've been thinking about it this week. That there's some group of people who really likes to pretend that the only 3 stocks I've ever talked about are Disney, Neo, and Roku. And I think that's very interesting. They always... You guys have some people in the comments just have a list of stocks I talk about. And once they explode to a new all-time high, they cross them off the list. And like, oh, we still got Disney down here. We still got Roku down here, right? We still got Square Cash down here. Let me give you a hint. Those are next. Anyway, 1, 2, 3, 4, 5 waves for Disney. That's wave 1 and wave 2. I think this is another wave 1 and another wave 2. We haven't broken that invalidation. 79.07 says that's wave 1 and wave 2. Wave 3 of wave 3, is going to begin. And we haven't broken, below 79.07 yet. We certainly could. And, that would be a miss. It'd be a miss to go on, and we need misses, right? If there weren't any misses, then, people wouldn't take, jabs. They wouldn't buy puts, right? They wouldn't give money to Ukraine, right? They wouldn't, think 3 buildings were knocked down by 2 airplanes, right? They got to have conspiracy theorists like me, miss them every once in a while. So they ignore the Nvidias, they ignore the First Solars, they ignore the Teslas and the Bitcoins and the S&P 500s and the NASDAQ, and they short and they miss, and then they got to work and they're in debt, and then they're little ants, building the anthill. And it's all part of the system. So 1, 2, 3, 4, 5 waves up for JP Morgan. ABC correction at the 61.8 to 78.6% retracement. Wave 1, wave 2, wave 3 of wave 3 in progress. Muy bonito for JP Morgan. This looks like wave 3 of wave 3 in progress. I'm expecting we're going to see the upper 160s, even 170s soon before a shallow wave 4. And a wave 5 higher. This is going to be a massive leading indicator. I think I'm going to leave out Canadian Imperial Bank, but the exact same idea, and huge dividend for CS. I'm probably going to post about Bank of America. Sorry, I'm probably going to post about Canadian CM, Canadian Royal Bank. The ticker is CM. I'll post about it pretty soon. But it's almost an identical setup to Bank of America, which you can see I, did not get perfectly. So we did break this wave C low, or sorry, we broke this wave 2 low. We didn't form a wave 1 and a wave 2 from this low, but it looks like that was, I want to say it was a stop rate. Now, I know you guys are seeing me move the lines. That's what they'll say. Well, if you're wrong, you'll move the lines. It's like, okay, well, what about like all the people who say like, oh, we're going to crash. It's not going to end well. They don't even give stops. They don't even give price targets. They don't even take positions. And you never remind them they were wrong. You never say, oh, you're going to move the line. Oh, you're just going to call the top from a higher level. It's like, okay, well, you know they're going to do that. Stop giving them money. Anyway, 1, 2, 3, 4, 5 waves up for Bank of America. Again, that RSI very clearly 1, 2, wave 3, higher in the RSI. A shallow wave 4, wave 5 with momentum divergence. I mean, so this is super tight, would be 26.32. Since we've had this kind of quick rally in the past couple of days, 24.83 would be a little wider. The length of wave 1, place of the wave 2 low, gives a very clear 5 waves up, 3 waves back at the 61.8 to 78.6% retracement. The length of wave 1, place of the wave 2 low, could take Bank of America on a high past 50, even all the way to 58 for a shallow wave 4 and a wave 5 higher. Consumer disco, don't mess with the Zohan, don't mess with Nike. 1, 2, 3, 4, 5 waves up for Nike. An ABC correction. I believe if I go take the length of this wave A and I place it at this wave B high, we get like an exact wave C in it. Or no, we don't. But anyway, so there are times where wave C doesn't fully reach the length of wave A, place of the wave B high. I think for Nike, that might be an example of that right now. It's pretty rare. Wave A, place of the wave B high. So we didn't quite reach wave C. For the equal legs, it's more quote unquote guaranteed that wave 3 will reach the length of wave 1, place of the wave 2 low. It's also supposed to be quote unquote guaranteed wave A. Wave C reaches the length of wave A, place of the wave B high. Nike, an example of a little bit of truncation. Truncation just means that wave C didn't reach the length of wave A, place of the wave B high, which is just another example of people in finance giving, fancy words to things that aren't fancy. 1, 2, 3, 4, 5 waves up for Nike. Wave 1, clear 5 waves. Now we do get all the way down to the 78.6% retracement. That's a pretty big indication that this is an impulse, and this is this is a correction that certainly has corrected the entire cycle. So above 92.73, bulls are going to look for, this is a large wave 1 and a wave 2. The long-term target would say we go to 200 for that equal legs wave 3 target. But even subdividing it within the cycle from this low, this is wave 1, ABC wave 2. 100 would be super tight. 92.73 would be a little wider. The length of wave 1, place of the wave 2 low, can take Nike on a wave 3 of wave 3 to 153 to 161 before a shallow wave 4 and a wave 5 higher. Here is Starbucks. 1, 2, 3, 4, 5 waves up. Gorgeous RSI impulse. It's the same thing, right? 1, 2, 3, 4, 5 waves up. Wave 3 has a higher high in the RSI. A shallow wave 4, wave 5 ends with momentum divergence, an ABC correction at the 61.8 to 78.6% retracement. So we have an opportunity for 5 waves up, 3 waves back. The length of wave 1 placed at the wave 2 low gives a long-term equal legs target of 144. I think there's a few ways to look at this. One of them is to call it an expanded flat, where this is a wave 1, this is a wave 2. An expanded flat just means wave B broke the wave 1 high. Then we had a wave C. That is what the bears are going to have to be saying is the case for Nvidia right now. It's what they're going to have to say is the case for Microsoft right now. And it's what they're pretty soon going to have to say is the case for SPY and QQQ right now. I'm not saying they're wrong. I'm just saying, you can call it an expanded flat. Eventually it gets a little too expanded and the broker calls you. But I think that we are going to see Starbucks take the next leg higher. We can see if you go to the bar chart straddle screener, and you go to long straddle and long strangle, you're going to see that as Starbucks rallies to 103, 104, 105, the MMs are going to keep raising their strike prices on their straddles to keep locking in those gains so they don't have to sell for dividends and tax purposes. We look at Amazon, another one, similar idea, where we've got, a couple of these stocks that are climbing the right side of the base. Amazon, same from the 2018 low, 1, 2, 3, 4, 5 waves up, an ABC correction at the 78.6% retracement. Then from this low, wave 1 and wave 2. So this wave 2 low is getting very wide, but I think this is another one where it's going to quietly climb the right side of this base. And this is 1, 2, 3, 4, 5 waves up. So 5, 3 to the 78.6% retracement. Bulls are going to look for another 5 past 188 all the way to an equal legs target of 204, possibly even further for a shallow wave 4 and wave 5 correction. Beyond that, here is Tesla. We talk about the weekly count a lot. Probably worth it. Actually, I just talked about Tesla at the beginning of this video, but we talk about the weekly count a lot. I think this also falls into the Nvidia and AMD category of 1, 2, 3, 4, 5 waves up on this kind of all-time chart, forming wave 1, wave 2, looking for that wave 3 in the long term towards a new all-time high. In the super short term, I'm going to keep holding Tesla. I'm going to keep holding Tesla. I've managed risk to the downside with the metaverse ETF straddles and strangles. I have covered call positions as well, even on Tesla with Tesla. But I'm going to look for this wave 4 low to not get broken. That's 240.70. If 240.70 doesn't go, then this can be a wave 1 and wave 2. And Tesla can enter wave 3 of wave 3. That next 161.8% extension is 335. If 240 does go, we got to listen to the bears who say that was 1, 2, 3, 4, 5 waves up, and see if there's going to be a wave 2 correction to buy. That would be my expectation. I don't think that's going to be the case. I do think, gun to my head, we hold this wave 4 low. We see wave 1, wave 2, wave 3. Up towards the 330s, maybe even a little higher. Enphase Energy supporting that idea. Enphase Energy very much supporting that idea. Another very clean impulse on the weekly chart where we can go to this kind of 3-year time frame. Wave 1 and wave 2 from this low. Then 1, 2, 3, 4, 5 waves up. Look at the RSI. You can even see it. 1, 2, 3, higher high. Shallow wave 4. Wave 5 ends with momentum divergence. So we have a wave 1, a wave 2 that ends at the 78.6% retracement. The length of wave 1 placed at the wave 2 low gives Enphase Energy a wave 3 target of 380. I'm in it. I'm going to hold it for this wave 2 low, 152.15. That's picked the low, 128.67. A little wide. Not very, not very meaningful from an invalidation perspective. NIO, I like to analyze mostly with China and the auto stocks. I think Goodyear Tire, General Motors, I posted about. Ford, all supporting this auto idea. I'm still looking for 1, 2, 3, 4, 5 waves up for NIO. An ABC correction at the 78.6% retracement. I know this sounds ridiculous. This looked ridiculous too. And NIO hasn't been perfect. It broke below this May 2021 low with a lot of ARC stocks and spilled out into wave C. So that's why I have to have stop losses and validation levels and risk management like everyone else. This is the one that, they hang up on the poster so they don't have to think about Nvidia and First Solar and Tesla, and Bitcoin and the NASDAQ and Microsoft and the stock market. But I don't think it's going to be on their poster for much longer. These volatile, names, they have these deeper corrections than everyone else. But I think this is wave 1 and wave 2. We're going to see that this is, pick the low would be $7 flat for NIO, and a wave 3 gets entered. Just another one kind of in the same kind of idea where, we have these deep corrections, but it doesn't really, it's just kind of growth. It's just kind of how these higher beta names are. They stay flat, for a long time, make people forget about them, go chase the next, hype train. But I think that there's a few of these, 2021 names worth sticking around for. That's at least how I'm seeing it. I'm buying ARC and I'm buying OARK just in case I'm wrong. Very similar to Tesla, about 2/3 OARK, the covered call version of ARK, 1/3 ARK. But I think looking around, there's some of these where it's, 1, 2, 3, 4, 5 waves up, and with Nvidia making new highs and Microsoft making new highs, the Nasdaq on its way. The next thing in the rotation could be the Russell 2000. It could be small caps, and it could be, while tech consolidates and takes a breather, we see some of these other names turn around. I think another one with I posted out about this one too. This isn't really in the the ARK growth name, but similar idea that there's just kind of the dash for trash setup, I would say, is materializing. I think that ETFs and covered call ETFs for me are the best way to play. China and high beta growth, and and making sure I have premium coming in to keep reinvesting. And more importantly, balancing out these higher beta premium collection holdings and these higher beta growth holdings with more stable holdings. I'm going to be posting about bonds a lot. I'm going to be posting, I've been making a lot of money, and making a lot of moves into TLTW and LQDW and LQD and TLT ETFs, running the buy rights on 20-year bond ETFs from the government, and investment grade bonds to help balance out some of this high beta risk. But I do think Canaan Creative, Nano Dimension, even Disney, kind of this idea that there's a laggard play going on. Disney definitely not a small cap company, but I am looking at a lot of these kind of names we've forgotten about. I'm going to talk about this one with Neo, but just for NetEase, this Chinese internet name. I think we're seeing, not everyone in China is getting a rally, but I think NetEase has kind of started to firm up the most. One large wave 1 on the all-time chart in wave 2, and an extremely clean 1, 2, 3, 4, 5 wave subdivision from this 2018 low. I believe this is an ABC correction at the 78.6% retracement. In the long term, we're going to see NetEase enter wave 3 of wave 3. Highly likely from a correlation standpoint, that's going to occur with Alibaba and KWEB. I think that Alibaba, is another one. Not Alibaba, KWEB is another one, that's kind of, Neo isn't technically Chinese tech, but I think 1, 2, 3, 4, 5 waves up is forming for KWEB. So I'm buying KWEB and Clip. I really love these dividends coming in from Clip. We're at the 61.8% retracement, the length of wave 1, placed at the wave 2 low. We could see KWEB enter a wave 3 of wave 3 up to 43. Bulls are going to look for 21.28 to not get broken as an invalidation. 24.34, it would be extremely tight. I think 21.28, that's 78.6% retracement, is more meaningful for KWEB. Square Cash, I would say, is another example of these, we could see a dash for trash kind of setup, and especially with Nvidia exploding to a new all-time high, Microsoft exploding to a new all-time high, the Nasdaq and such. I could see a scenario where Microsoft and Nvidia and, even while Tesla and AMD, are playing catch up, they're, starting to go sideways. They're starting to digest some of these gains, and we see kind of the smaller cap, more, Cathy Wood corner of the market, more IWM, even IWC related names play catch up. That's one thing I'm looking out for. I'll post about IWM next week, probably, to talk about why I'm thinking about that. One, ABC wave 2 for Square, another wave 1, another wave 2. I think from this low also a small wave 1 and a wave 2 forming. So 55.05, still a pretty wide level for Square, but I think we're seeing these kind of impulses start to form up from these lows. If we look at a very similar chart for ARK's broken this kind of small wave 1 high. I think ARKW has also broken this kind of small wave 1 high. We can start to maybe see these counts firm up for these wave 3 of wave 3 lows. Remember that Nvidia, when it started, it gave this kind of small, little wave 1 and wave 2 that developed, and everyone kind of ignored it. Everyone kind of said, no, there's no way. But yes, that small wave 1 and small wave 2 was the beginning of a monster wave 3 or wave 3. It could be happening with Square. It could be happening with a lot, this other side of the market. BITO is going to be the Bitcoin ETF, Bitcoin play. for this video. 1, 2, 3, 4, 5 waves up. Again, just so pretty. Look at this RSI. 1, 2, wave 3, higher high on the RSI. Shallow wave 4, wave 5 ends with momentum divergence. ABC correction wave 2 at the 50 to 61.8% retracement. So I'm looking for this to be another wave 1 in ABC wave 2. I'm looking for 13.90 to hold and BITO to enter wave 3 of wave 3 to plus 20.40, even higher. Ethereum, in the very same vein, I'm looking for this to be a wave 1 and a wave 2. I'm looking for this to be another wave 1 and another wave 2. The pick the low wave 2 would be that 1624 was the wave 2 low. 1627, my bad, was the wave 2 of wave 2 low. 1372 would be a little wider, not as useful, but the bulls are going to look for Ethereum with Bitcoin to kind of materialize into this wave 3 of wave 3. If we're just looking at the daily chart, what the bulls are going to really zoom in on is they're going to say, okay, if this wave 2 low holds right here, I know it's getting a little messy, but if 1372 holds for Ethereum, we can see a wave 3 of wave 3 begin in the more near term, where the length of wave 1 placed at the wave 2 low gives an equal X target of 2,389 before a shallow wave 4 that retests the wave 1 high. A wave 5, this the length of wave 1 placed at the wave 4 low, could take Ethereum up to 2,895. That would be a very kind of short-term daily count idea. I just kind of wanted to talk about the potential for this to be a wave 1 and a wave 2. So we'll see 1372 hold, and that this is another wave 1 and another wave 2, and Ethereum is going to enter wave 3 of wave 3 towards 3,000 with Bitcoin.